Hello, thank you for joining the South Carolina Department of Consumer Affairs for our Wednesday webinar. I'm Scott Cook. I'm the Communications Director here at SCDCA, and I do like to give you a quick little roadmap of what we'll be talking about. I'm going to give you a quick overview of who SCDCA is, who we are, and how we might be able to help you. We'll talk a little bit about credit reports, give you a broad overview of what is on a credit report, and then we'll talk about what is a credit score and some of the basics of that, how they're calculated, kind of what affects your score, how you can maybe improve it, and then we'll go over some credit myths as well. And if you've been on any of our presentations, you know we always talk about things you can do to keep your information safe. So we'll give you a couple of free tools that you can take advantage of. Most of the stuff that we will tell you is always free, so that's something important to keep in mind too. So how can SCDCA help you? Most people know us through our complaint process. We took about 6,000 complaints last year. And a lot of times I tell people, you know, it's just coming to us and writing out what's happened, what you've tried to do, and what you would like the business maybe to do in response to that. And sometimes just getting that complaint, that information to the right person in a company will at least, you know, be able to explain why something maybe happened, but you may be able to get, you know, some kind of resolution with that process too. And again, if it's something that's not regulated by state law, we use voluntary mediation process with that, or we may refer it to another state agency. If it is something that is mandated by state law for another agency to handle, we will get it to the proper place. So you can take advantage of that resource if that's something that will help you out. You can report scams to our office. I always encourage folks to report them, even if you didn't fall victim to a scam. And that just helps us know what kind of is going on across the state and might help other people from becoming a victim. And we can kind of get you some information to things you might be able to do if you've fallen victim to a scam, some things you could do to potentially get money back or at least protect yourself from further harm. And on that same token, you can report identity theft to our agency. We have an identity theft unit that was created about 11, 12 years ago, I believe. And they can kind of go through that process again with you. They've got a little checklist. So if you have an identity theft situation, they can tell you kind of those steps you might need to take to kind of minimize damage, maybe prevent further damage and some things like that. In some cases, able to help folks get credits, adjustments to some of those accounts as well. And you can background a business with this. And what I mean by that is you can kind of go through our complaint database, look at some of those issues that maybe been filed in complaints with the business on our agency's website. But you can also look to see if it's a company that we license, if it's one of those areas that fall under our regulatory authority. And we also have some links to other state agencies that might either license or regulate those types of businesses as well. And we have all those links on our website. And we do free presentations. We, of course, do them virtually for groups, but we will also travel across the state and see folks firsthand and talk to you about a variety of topics. Credit reports and scores, obviously, is one of them. We also do a lot of scam prevention, identity theft, things like that as well. So we have a long list of topics. You can go to consumer.sc.gov to get that list. And of course, we do those free for any group that might be requesting those. And of course, we try to answer your questions. So if you have anything that comes up, you can shoot us an email or you can also give us a call. We have a live person who will answer our phone during regular work hours, 8:30 a.m. to 5 p.m. on weekdays. And then you're not going to get that press 2 for this, press 3 for that. You'll get a live person, and hopefully we'll do our best to at least point you in the right direction if it's something that we're not, you know, directly involved in. Consumer.sc.gov is our website, and that little how do I button that's right there in the middle of the screen is kind of that best place to start whenever you're looking at our website, and it'll give you those direct links to a lot of those resources that we just mentioned. Of course, today you come to us to hear a little bit about credit reports and scores. So we just kind of want to start real quickly with some basics here. Credit reports and scores, what's the difference? So of course, credit report is that kind of list that's going to reflect your credit activity. And then your credit score is that calculation of activity on your credit report. And we'll kind of get into a great deal of detail on these two as we get moving. But I always like to start with just how do I get my credit report? And the only site that we recommend for getting your credit report is annualcreditreport.com. And you can also call that phone number that's listed there. The reason we say that that's the only site that we recommend is just because it's mandated by federal law, and I'll kind of discuss some of that a little bit later. But annualcreditreport.com will give you access to Equifax, Experian, TransUnion, the three major credit reporting agencies, and you'll be able to get access to those all at once, or you can take a look at them, briefly over time. And while it is called annualcreditreport.com, you will get access to those at least once a week now. They've changed the rules on that. So that's why that website is that name. But the credit bureaus a few years ago started offering those reports that kind of went beyond what the law mandated, and they went to once a week. You can get access to those reports for free. We also know that some of the free sites that are out there, they may be using your personal information for one way or another. If it's stealing that information and kind of tricking you into clicking on those sites, or they may be using your information to sell you or give you ads, try to sell you different products and services, things like that. So that's kind of why we recommend that site. So what is your credit report? It's going to be that detailed record of how you've managed your credit over time. So it's kind of that big long list of everything that you've done. So we'll have a whole lot of variety of information on there, and we'll kind of discuss a lot of that. But Experian, TransUnion, Equifax, they're getting all kinds of information from creditors, public records, and they're basically putting it all into one place. So businesses can come and they'll look at your credit report and decide if that's just get an idea of how you're using your credit, how you're spending money, how you're taking out loans, things like that. And so what kind of information is on it? Personal information, of course. So you always want to kind of go in there and look at everything. It's going to list your name, maybe names you've used in the past, current and former addresses, birth dates, social security, phone numbers. I just went through mine yesterday. Tell people, it would take you about 5 minutes with each one of those. So I did all three. So it was about 15 minutes. But it was kind of interesting. I saw a lot of former addresses that, some of them I sometimes don't think that I'd actually used before, but I had, previous work addresses, especially when I moved back to South Carolina for a bit. I was using a work address at the time to get a lot of mail while I was trying to figure out where I was going to live permanently and that type of stuff. So a lot of those addresses for things like that might show up on there. Also had some previous addresses that's been quite a bit since I've lived in. But it's just kind of good to kind of look through those, and you'll see those addresses listed. And of course, if you're finding addresses for things you don't recognize, you want to kind of flag that, and they'll give you a little place to challenge that information. But kind of the same thing with phone numbers. Had some old cell phone numbers, some old phone numbers listed that I had with previous places of employment. And again, those were all just kind of things that I probably put in on an application when I was getting my mortgage and things like that, where I put, my work phone number on there. So I would make sure I got that phone call whenever they were calling. So that's kind of why those numbers were listed. But again, it's kind of that good reminder, just kind of go through there and look and see what those numbers and addresses and all those things are. And hopefully you recognize them. And then you can kind of challenge anything that, doesn't look familiar to you, or it could be a sign that, some kind of identity theft situation might be going on. So you want to take a look at those things pretty closely. It's also going to list any kind of credit accounts that you would have. So it would have current, past credit accounts, list kind of the type of account with that as well. It's going to list any credit limits or amounts with those. It should show the account balance, payment history, if that account was opened and closed, in the name of the creditors. I know, like I said, I just went through mine yesterday. At first, I kind of clicked on something. I caught myself going, why is this listed as closed? But I was looking at my old car payment. So, it was listed as closed, which was great. It actually, is a closed account. But then I was like, oh, okay, I clicked on the old one, not my, current car payment. So, all of those things will be on there. It will be listed, and it will again show you kind of that account balance and what you're paying. So when I went in there, saw my current car payment, I was able to see, what that total loan had been listed for, how much of it I've paid so far, and what those monthly payments are. And it does show that, you're paying that all the time. And like I said, when I looked closer at that old car payment, it did have it listed as closed, and it then had that date on there. So that's kind of important information to look at. And if some other company, was taking a look at my record, they would be able to see, hey, Scott does have a car payment currently. he's making those payments, and they'll go back and look and they'll say, oh, he's also closed this account in the past. He paid that in full. Everything was handled properly. It's closed. So that's kind of a good indicator, again, record of that. And if you're going through these things and you're seeing these balances and those types of things that aren't kind of adding up and they're not quite looking right, again, these credit reports should kind of give you a way to kind of notify those Experian, TransUnion, Equifax that something's not right and that those accounts aren't listed there. And they'll kind of give you the process for challenging any of that stuff or notifying them that something's not right. There's also a section on them that will list public records. So kind of outline anything that you might have that would show up in court, generally some kind of civil suit, a judgment against you, maybe lien, bankruptcy, those types of things. Creditors are taking a look at that type of stuff. So if they're seeing those types of things, they may be evaluating that and kind of using that in their decision process if they want to give you a loan or grant you access to that line of credit. So just kind of keep that in mind as well, that they do go through those public records and that might show up on your credit reports. It's also going to give you a list of inquiries. So those hard inquiries are those things like when you're applying for credit. And those will impact your score, but those hard inquiries, again, it's a hard word to say, inquiries, but those hard inquiries are going to be those times that you've actually applied for that credit. And the soft ones will be listed on there, but they're basically when creditors maybe checking your reports to see if they want to give you that pre-approval, and then they'll send you that offer, right? So those aren't going to impact your score, but they will be listed on there. I went through mine yesterday. I did see a few soft inquiries listed on mine. One of them was a insurance company. I'd called my insurance agent a few weeks ago or maybe a few months ago and asked her, about my rates and things like that and some policy things. So they likely ran something, kind of see about some of those pre-approval offers with one of the insurance companies when I was discussing those rates with her. So that information was listed on there. Again, not impacting my score, but I am at least able to go in. I can look at who's looking at my credit reports and kind of why they might be looking at it. So in that case, that kind of made sense. I also noticed, my credit card company had done some soft inquiries on my credit, and they're probably just looking to see if, what my record is indicating right now, how things are going, and they might use that information to, possibly extend my credit limit if, that was something I was interested in or something. I know I get those notifications from them from time to time that, if I'm interested in extending the credit limit or whatever the case may be, you can do that. So that, again, they're looking at that credit, how I'm spending money, how I'm managing my credit. And so that information that they were looking on there is listed, did not impact my credit score, but it is on that credit report when I took a look at that. So how is your credit report used? And some of these, I've got some examples here, and I know I've spoken with people from time to time, and they get a little bit upset about some of these that, creditors and businesses may be looking at your information sometimes, depending on what you're doing. Buying a home, of course, they're going to pull all those records, and they're pulling a great deal of records for something like that. But even setting up a utility account is a time that they look at your credit reports. I just changed internet providers a few months ago, and one of the things they wanted me to do was put in that application to run my credit reports. So then they could decide if they're going to send me that equipment, set up all those accounts and those kind of things. So even for like an internet provider, that might be a case. But if you're doing a new cell phone, something like that, they may be looking at it. And of course, buying a car, borrowing money. But the thing that people don't think about sometimes is even, changing jobs. They might be running your credit report. So if you're going to be in a position where you're dealing with finances, they might want to take a look at how you're managing your credit and your money and things like that. So that might be a reason why they're running that credit report, depending on what type of work you're looking at. And then even, like I said, buying insurance. I just mentioned that I could see that soft inquiry on my report that way. And then even renting an apartment. So your apartment may be looking at, they may want to know how your spending is going, what kind of loans you have out there, how much money you have involved in that each month. And they're basically looking to see how reliable you are and if you're going to pay your rent on time and that kind of stuff. So that might be why they're interested in taking a look at that. So now we'll kind of get into what should I check on my report. And I've kind of mentioned some of these things from time to time already throughout the presentation, but you want to kind of go through, make sure things are accurate. You want to make sure they're complete and that they're up to date. So like I said, if they're showing some car loans or something like that, you just want to make sure that it is that accurate amount of information of what your loan was actually for, that you're paying it. And if you paid off all that stuff, you want to make sure it's listed as closed. So that's kind of what we mean is up to date. And again, you want to look for those signs of possible identity theft. So if you're seeing different phone numbers, different addresses, or even those accounts that you're not recognizing. So if you're seeing loans or, credit cards, things like that, that just don't make sense to you, you're like, I do not have this credit card. That would be a sign of identity theft, potentially, that somebody has opened that credit card in your name and they're trying to put you, on the hook for paying those bills. So you kind of want to go through that. Again, if you're seeing any of those accounts listed that don't belong to you, there is a process to challenge that. I was just looking at mine yesterday again, and you could see the little button at the bottom of the screen. There's a little thing where you could challenge it or just kind of notify them that something's not right, and they'll kind of walk you through a lot of that process. There's a great deal of information on those sites about what to do if that information is not correct. And of course, if you're seeing signs of potential identity theft, you can contact SCDCA, and our identity theft unit can kind of walk you through that process as well. So what should you check on your credit report? Personal information. Again, we kind of mentioned those at the top: security, social security numbers, phone numbers, previous addresses, maybe marital status, things like that. Just kind of go through all that, make sure it's all making sense. Account information, you're going to want to look at those lists, make sure everything's listed right and that it has that right status. So again, if things are closed accounts, you've paid that car loan, you want to make sure it's marked as closed, something like that. Those balances, again, you want to make sure those balances make sense. I know I was able to look, and my balance for my credit card was pretty accurate. I haven't paid that this month yet. So that list that was on there, what it listed for my credit card balance, all that is pretty close to what it is at this very moment. So, that all checked out for me. So you want to go through that again, just kind of make sure all that information is up to date. And if you find errors, anything's incorrect, you can dispute it. They're going to give you directions on how to do all that. And like I just mentioned, you can come to SCDCA's Identity Theft Unit. We've got those forms on our website, consumer.sc.gov, and you can file that identity theft report with our office, and we can kind of walk you through that process of challenging that and taking those additional steps, because sometimes you do have to reach out to some of those companies that may be listed on there and involved and all that. So just kind of walk you through that, and we're able to help folks out with that process because it can be pretty frustrating. Again, annualcreditreport.com is the site that our agency recommends doing that. That's the only one we ever tell you in our presentations to use. It's authorized by federal law, so there are standards that they have to kind of maintain and follow with that site. I didn't mention it earlier, but if you are going to annualcreditreport.com or even calling them, you do have to provide social security number and some details to them, just so they're using that information to kind of verify who you are. That information is kind of tied into your credit reports and how they're looking at you. So you do have to kind of put that information in and then answer a few little questions so they can verify who you are and that everything's checking up. But again, annualcreditreport.com is going to give you access to a free credit report from Experian, TransUnion, Equifax, and you can get one every week from the three of them. It is not going to contain that credit score, so you might have to go to another site to get those credit scores. A lot of times you do, might have to pay for a service, or your bank or your credit card company may offer you access to those credit scores, and we're going to kind of get into that in a second. But annualcreditreport.com is not going to give you access to that score. So again, you want to look at your credit reports at least once a year. You can go through it. Like I said, they're available every week. You probably don't want to go in that often, but if you go in from time to time, look at that. Like I said, I went in through mine yesterday. I've been on those sites quite a bit since I've started working here at SCDCA. Honestly, it was something I don't remember doing before I started working here 4 or 5 years ago. So, encourage folks to really think about this, take advantage of these free resources and use them to kind of monitor what's going on and make sure you don't have those signs of identity theft. But again, you kind of want to review all that information quite regularly, at least once a year. After you've done it a few times, it gets pretty quick. Like I said, mine took me less than 5 minutes. I timed myself, and I think I was on the site for 15 minutes, and that involved one or two people calling me while I was trying to, take a look at that. So, a few minutes with each one of those. If there's a rainy Sunday or something and you're sitting on the couch, just do it on your phone real quick, and it will kind of help you out again, spot those signs of identity theft, anything that might be going on that's not quite adding up. So now we're going to kind of get into those credit scores and looking a little bit about them. So what is a credit score? It's basically going to be a 3-digit number that the credit bureaus or these companies have come up with, and they're designed to basically predict if you're paying your bills on time. So a higher score is basically better on this end. So they're basically looking at everything you've done, what all that information is on your credit report, and they're basically coming up with a number that they're using to try to figure out how well you're managing paying bills on time and things like that. So here's kind of the quick list of some of those score ranges. 300 around that area be kind of what they consider as poor, and then anything above 800 would be excellent. So again, 850 is generally that highest number that's on there. These numbers that we have here just kind of general. They're not meant to be kind of that end all be all, but this is generally kind of what those ranges will look like. And, at least the times I've gone in and applied for credit, they'll look at it. They'll say, we looked at this score from this company. This was what you scored. And, we consider that, good, very good, whatever the case may be. They'll kind of tell you that as you're applying for that. So they should be telling you kind of what they're looking at and how you fare on that range as well as you're applying for any kind of loan type of credit and things like that. And I kind of hinted to some of this, but there are, multiple types of credit scores. So the big two, FICO and Vantage, again, scores range between 300, 850. FICO is that one that you probably hear about the most. I know I see that a good bit on my credit cards when they're, trying to get me to click on that and look at my credit scores and those types of things. So, my credit card company and my credit union that I use, they will provide that information to me for free, but they will generally list which one of those they're kind of providing you. So when I look at it, I know it's one of the FICO scores that they're showing me. And again, that's used in about 90% of credit granting. And you're also going to have multiple types of scores even within those. So there's multiple FICO scores, and I'm going to kind of show you that here as we get moving. So as I just mentioned, there's more than one FICO score, and basically they're looking at that. They're evaluating your credit risk, but then they're looking at it within very specific situations. So auto lenders, for instance, they have the FICO auto scores, and then there's another version that credit card issuers use. So they might be using the FICO bank scores or FICO score 8. So there are multiple different ones, and they're basically tailored to whatever that creditor needs or that company needs. So they're looking at what that very specific type of credit or loan might be, and then they're evaluating the risk of offering you those funds based on those formulas that they've come up with. And I'm probably getting ahead of myself, but we always do tell people that some of these scores, they are kind of proprietary information. So the companies have a lot of very specific data that they're using, and they're not always kind of sharing how all these numbers come to be. But they will, at least if you're applying for something, they should be able to tell you which type of score they're looking at too. So they'll tell you it's the FICO auto score, or, whatever the case may be, depending on the type of loan that you're looking at. And, people get kind of hung up on those numbers sometimes. You want to have that good score. You want to have that excellent score. Just kind of keep in mind, too, that it is normal to see slightly different numbers, and it can, vary on a variety of different things. Our example here is you might be looking, you see 726 when you're looking at your credit card company, but then whenever you go in to maybe a monitoring service or something like that, you're checking the score and it's giving you a different number. And then the auto lender may even be giving you a different number on that too. So kind of the big thing is they may be looking at different things. They may be looking at different scores altogether, or different types of scores, I should say. So those, the auto score, the FICO score 8, those types of things. So they may be seeing different things. And then even depending on when they're pulling those, they might even see different information as well. So kind of my example for this would be, just a few days ago, I got a notice from a monitoring service I'm subscribed to through a company, and they sent me a notice saying my score went down a few points. Well, I know my score went down because I've had some different credit card bills that I just put a lot of travel on. So, a week or two ago when I hadn't spent that money on those travel expenses, my score was probably higher. But since I put all that on a credit card, that score kind of went down a little bit with that. So just kind of depending on when they're looking at that number, might be a little bit different. I'm about to pay that credit card off. So even next week, that number will change a little bit more too. And we'll kind of go into some of that here in a second, but just kind of keep in mind when they're looking at these things, those scores can change a little bit. Hopefully they're relatively close, especially if they're looking at the same types of scores, would generally be about the same, but just kind of keep in mind they can fluctuate depending on when they're running that and all those other factors. So what is the score made of? This is a pretty good chart here from FICO, kind of showing the FICO score, how they determine with that. So you'll kind of see the biggest part is payment history. And I'll kind of go over each one of these little sections here as we get moving. But payment history, of course, the big one. The other part is that amount you owe. So those are kind of the two big ones. And then they'll look at mix of credit, maybe some new credit applications if you put those in recently. And they're also looking at the length of credit history as well. So we'll kind of get into a little bit of detail about each one of these little points of that circle. So we'll start with the biggest chunk, and of course that's payment history. So they're looking at, how well you are paying all your bills on time. They're going to look at late payments, collections, charge-offs, bankruptcies, judgments, liens. They're kind of looking for those big things like that. So those late payments would be that kind of big ding on your credit, of course. So they're all looking at it, and basically they're looking at also kind of the time frame of this. So the older the information, the less it contributes to the scores. So if you're paying off things now, that's going to kind of benefit you the most, right? So if you had a late payment, years ago, that's not going to take off as many points as, missing a payment, within the last few months. That's going to hurt you the most. So the longer you pay all this stuff off and pay those bills, the better it's going to help you and kind of improve that score too as you go. People always ask about how long things stay on there. Generally, when they're calculating those scores, they're looking at the past 7 years. Usually, they're looking at all of those things that you've done over the last 7 years. They will look at 10 years for bankruptcies and things like that. So those would kind of potentially hurt you for that 10-year period there with those bigger items like that. So just kind of keep that in mind. But again, generally speaking, kind of that most recent stuff is what they're usually looking at. Then they're also going to look at the amounts owed for 30% of that score. What we tell people is generally better to have several accounts. With lower balances, I want to look at balances, that number that they're looking at, and it's going to enter that percentage. They kind of recommend 10% for most of those types of accounts. So if you have a credit card account and your limit is, say $10,000, you want to keep that account listed as about 1,000 would be kind of that 10% recommended per account with that. And again, kind of lower utilization, the better. Like I mentioned, I know I had one that I, put a great deal of funds on one credit card, put a couple of flights and some hotel and things all on that one card. So for the time being, that utilization is pretty full. Got a lot of big ticket items on there. I'm going to be able to pay it here shortly. So that will kind of go down once this next little payment cycle goes through. So just kind of keep that things in mind, that looking at those scores, that high utilization can kind of impact that score, because they're looking at that and they're saying, oh, Scott's credit card has a good bit of money on it at this time. So for that time period, that might impact my score. But, by the time my credit card is due, that will be paid. So that, will benefit me. Length of credit history. So that might impact your score as well. So basically they're looking at how long some of these accounts have been open. And generally the longer you have something open, the better. So the longer you have that same credit card, the better off you're going to be. And they're looking for that history. So they want to look, make sure you're paying things off. That's why they like that long history, because it shows, over those several years, whatever the case may be, you are paying on time each month, or you paying, everything that you owe. So that's kind of why they look at that. And if you're struggling to create a credit history, one option, and I know we have some presentations just built on, creating credit history. Secure credit cards, kind of one of those things that we recommend if you're struggling to create that credit history, just kind of help you get that history of being able to pay that. So with the secure credit card, you're basically depositing money into the bank or whatever the holder of that account is. So you're kind of giving them money, and then you're basically borrowing against the money that you've put in there. You're still paying those bills every month, kind of like you would with a regular credit card, but it's just kind of that thing you can do to be able to create that process of I pay this each month, or I pay each billing cycle, whatever the case may be. So that's just kind of one of those little tools that you can do to establish a credit history. You can also, if you've got a family member, parent, grandparent, whatever the case may be, close family friend, somebody who will let you be an authorized user on a card that's in their name, that's another option. Obviously, you've got to have a pretty close relationship with that person, because they're going to be kind of held accountable as well for that. But, these are just two options that you can take advantage of. You want to just make sure that whichever one you're taking advantage of, that they are actually reporting those to the credit bureau. So you're kind of getting, rewarded for making those payments on time. You're providing them with that history. They're putting it on a credit report for you. So it's showing that you are paying these things on time and you have this history of making those payments. New credit inquiries is another part. And again, that's about 10%. And we talked a little bit about those hard inquiries, and that's when you're putting in those credit reviews or putting in those applications. They're running that credit report to make sure they're going to give you that car loan or whatever the case may be. That's kind of the big one that most of us do. So that's why I kind of keep referring to it. But whenever you're putting those in, they're doing those hard inquiries to, make sure they're able to actually give you that loan or, that line of credit, whatever the case may be. And those soft inquiries, again, going to be those times where they're just getting that kind of pre-approval process. So a lot of times you see the little websites that have the pre-approval thing for your credit card or whatever the case may be. If they're sending you that stuff in the mail, they've already done that pre-approval process. So you're probably seeing that after you've already been pre-approved. You haven't put in that application yet. But then once you put in that application, that's kind of that hard inquiry. So just kind of keep that in mind. If you're putting in a lot of different credit card applications all at once, they might look at that and say, what's going on with Scott? He's applied for, 8 credit cards this month. What's going on with him? They're kind of using that as a judgment of, maybe something's happening. Maybe we don't want to win him credit in this case. If, there's a ton of loans being all opened up at once, they might look at that. It would impact my score. But again, 10% of that is kind of those inquiries and those times that those processes are being done when they're running those credit checks to see if you can apply for that. The credit mix is another thing that they're looking at. So they're just kind of looking at how many different types of accounts you have. So if you have an auto loan, a mortgage loan, and credit cards, they like to see a mix of all these different types of things. So that might show if you're paying all these different types of things on time, you're low risk of, lending money to. So they'll kind of look at what all types of loans you have and how often you're paying that again. But that mix is about 10%. Kind of give you a couple quick examples real quick here, just kind of in general about how some of these things might impact your score. Again, these are all general estimates. Those formulas that they're using, we don't know the exact ways that they're doing that, but they're just kind of, again, proprietary information that they're keeping to themselves. They all kind of have different ones. Each credit bureau or each kind of, company that's doing those scores, they all have their different formulas. So they kind of use that information for their business model. So they're not sharing a lot of that with those very specifics with everybody. So just kind of keep in mind, these are, again, general numbers. So if you're paying your bank, card, your credit cards, things like that, and suddenly you're 30 days delinquent, you might want to look at that and say, what's going on with my credit? Maybe something's happening. Maybe we don't want to win him credit in this case. Even if you have a very good score, that's going to be about a 100-point drop, 90 to 110-point drop, we estimate with that. So just kind of keep that in mind. That's going to be a big hit. So that would kind of drop you into that next level, right? And then, of course, those big ones like the mortgage charge off or foreclosure, that's going to be another big drop on those points. And of course, bankruptcy would be the big one, 220, 240-point drop. Of course, that's going to be a big dramatic incline on that chart that we showed a little bit ago. So that'll drop you down a good bit with that. So just kind of keep those in mind. And again, the best way to be on top of all these points is just to pay on time and pay it in full every time. And I'm kind of getting ahead of myself, but the best way to boost your score, pay your bills, pay your, those things on time. That's going to be the best thing that you can do. People are always asking us all that, how do I improve my credit? The best thing you do is pay those bills on time. And you want to have that long history of being able to pay those bills on time. And of course, you can do that mix of credit types. So car loan, mortgage loan, credit cards, maybe a short-term loan if it's some kind of personal loan, something like that. But if you have a mix of different types of credits, it's going to show those creditors that you're maybe low risk, and they'll kind of improve that score for you. And also just kind of keep in mind some of those applications. So you don't want to be running a whole lot of applications all at once. Now we'll kind of get into some of the common credit myths. And our first one here is checking my credit report will hurt my score. And it will not. So the fact is getting your credit reports will not hurt your credit scores. And it's a pretty good tool to make sure your information is accurate and up to date. So it can kind of help you manage whatever's going on and get a good broad view of, how you're using your money, what things are, where your money's going to each month or whatever the case may be with some of those loans. But it's a good kind of resource for you. So again, getting your credit reports is not going to hurt your score. Go to annualcreditreport.com to get those scores, or your credit reports rather, not your scores. Sorry about that. The next myth, I only have one credit score. We showed you a little bit throughout the presentation, but you actually have multiple credit scores, and it kind of depends on which model that company's looking at. Could even depend on what day that score is being looked at and when it's being calculated and things like that. So just kind of keep that in mind. It can be normal to see those different numbers throughout the year and on different sources. Generally speaking, again, they should be able to tell you which one they're looking at, and that at least that name of what they're looking at. And if you're being denied, they should be able to tell you about that. And then you can go to your credit reports and kind of look at all that information, maybe determine why you would have been denied for that. But multiple credit scores for you. Our next myth, carrying a balance on my credit cards will improve my credit score. The fact is just paying off those credit cards in full every month is going to be that best way to improve the score. And it's going to be the best way to kind of maintain a good one. So again, they want to see that history of I paid my bills in full every month. And if you have that long history of doing that, that's going to improve your score the best. So that balance is one of those myths that's out there. Just kind of keep in mind paying off those cards every month in full is going to be that best thing you can do to improve your score. The next myth, I have to pay to get my credit reports. We just told you about that, annualcreditreport.com. It's free. All three major credit bureaus, Experian, TransUnion, Equifax, they're going to offer you the free credit report each week. A few years ago, you would have had to pay if you wanted to go in a couple of times a year to look at those. But now that is a free service. So one free credit report from each of those three major credit bureaus every week. The next myth, getting loan estimates from multiple lenders will hurt my credit score. You do want to shop around for credit. You want to be able to compare all of those offers, get the best rates. Do your research before you start apply though. Those estimates aren't going to hurt you, but once you start maybe applying for tons of loans at the same time, putting in all those applications for those hard inquiries, that might impact your score. But if you're just kind of doing that initial shopping around, again, those pre-approvals, those soft inquiries aren't going to hurt you. So just kind of make sure you're asking questions when you're, talking about that. I know I've heard from a few folks who said they didn't realize, some of those hard inquiries were being put in. Just kind of ask when you're doing all that. research. Ask if they're doing that soft inquiry or that hard inquiry. That will help you out as well with that too. So you want to shop around, kind of know what some of those rates are, and that will kind of help you out as well. And I know when I was looking for car loans, I was able to ask my bank, I was able to ask a couple of different companies. They kind of generally could tell me, if you got good credit, probably be able to give you this rate. So they're able to provide a lot of that information beforehand, before running any information of mine through their system. And our next myth, closing credit accounts will improve my credit score. This one's kind of tricky, right? But if you are closing accounts and you're holding that same balance, you're probably going to be using a higher percentage of your credit limit. So that could potentially lower your credit score. So again, it's that kind of history and that balance together too. So you want to look at that, kind of evaluate that and determine, what you might want to do with that. But, if you're holding the same balance and you're keeping it within, just a couple of different accounts, that could potentially, impact that credit limit. And that's going to impact that score a little bit. So just kind of keep that in mind too. Again, that wasn't one of the higher percentage ones that we look at, but it could potentially impact your score. Our next myth, there are only 3 credit reporting companies. Equifax, Experian, TransUnion are the 3 major nationwide ones that we talk about, but there's a lot of other ones out there. And they all have different kind of purposes that they're looking at. Some of them may be looking at employment. There may be some for tenant screening, insurance. I know I dealt with one not too long ago that looked at a lot of other type of information that I got some notices about that was going through insurance and driving records and things like that. So there are these other companies out there, and they all will provide that free credit report to you every 12 months at least. So if you're hearing about another company that's pulled your credit and is being used by, one of these employment companies that you're looking at, or an insurance or whatever the case may be, they should be able to tell you which credit bureau they pulled that information from, and then you can go to that bureau and get that, at least that one copy of that report every 12 months from them. So they should be able to provide that to you. And again, there are a lot of different ones out there. It's not just those 3, but those are the 3 kind of major ones that, if you've been on our presentations, you hear us reference quite a bit. And I want to get into a few quick things to just kind of help folks avoid scams that may be out of there. There are a lot of claims that are out there, and if you've seen signs like this, just kind of know that they are a scam. Kind of the biggest thing you can do as far as your credit identity and those types of things is just kind of dispute any of those errors that you see on your credit reports. And generally, you're not going to need to pay a company to do that. You can do a lot of this stuff yourself for free. So just kind of keep that in mind. And I'm going to give you a few little red flags here about different credit repair scams that may be out there, and just kind of know credit counseling, debt management, companies, debt settlement, negotiation, credit repair. They all have to, they have very specific rules that they have to follow. So if you want to deal with the credit repair company, go to our website, consumer.sc.gov. We do license those credit counseling services, things like that. So you want to go to our website, make sure on that list that they're able to provide that service here in our state. And if they're pressuring you to pay upfront fees, don't do it. You don't want to pay those fees upfront. And if they're promising that they can remove all kinds of negative information from your credit report, just know that that's not true. If that information is accurate and current and it actually belongs to you, it's going to be on your credit report. These companies, some of them may challenge some of these things and try to get it removed from your credit report while that challenge is kind of underway. While those challenges are underway, they're not going to show up on your credit report. But once those companies figure out that it's accurate, current information, it's going to pop right back on there. So if it belongs to you, it's going to be on your credit report. That information is not able to just kind of vanish into thin air. So just kind of keep that in mind. If you're hearing from companies that are promising these kind of things, it's kind of one of those red flags that you want to watch out for. Now we're going to kind of wrap up with some quick things to do to keep your information safe. And we've got 4 little quick tips to keep you safe. First one, consider a security freeze or fraud alert. If you've been on our presentations before, you hear me talk about this every week. Security freeze is a great tool to take advantage of. It's basically going to limit your credit reports so other people aren't able to put in applications and that kind of stuff. So you're basically putting a lock on it and telling people not to issue lines of credit while you have that freeze in place. If you'd like to do that, you do have to contact Experian, TransUnion, Equifax, all three of them individually. You put that security freeze in place, and it's just going to limit your credit report and access to it. So you're not able to put in those applications unless you lift or thaw that freeze, and then you'll be able to do that again. It is free. The fraud alert, if you're finding signs of identity theft, you want to put that fraud alert in place, and it's basically going to notify businesses that something has happened with your credit accounts or your credit report and that they need to take extra steps to verify it is you. So we'll put that fraud alert in place. You can contact Experian, TransUnion, or Equifax, and they'll notify the other two. So that's kind of that one call response for that with that fraud alert. And they'll notify the other one. So you can put that in place and just kind of notify businesses that they need to take those additional steps to actually verify your identity if somebody's put in those applications. Always encourage folks to monitor your statements. You want to do that quite regularly. There are limits, with credit cards, debit cards, things like that, of how fast you can challenge things that, maybe showing up that you didn't actually make those purchases. So you just kind of want to monitor all those things regularly, at least once a month. Make sure that you're not seeing those signs of something going on that you didn't authorize. But you also kind of want to keep in mind any government benefits, things like that too, medical statements as well. Just kind of keep in mind on all of those different accounts. Look at them quite regularly and just make sure that everything on it is something that you've authorized. And if you're seeing, other charges and things like that that you didn't do, that might be a sign of identity theft. And we want everybody to defend against scams. Of course, we have a lot of different presentations in our Ditch the Pitch guide on scam prevention. We just kind of encourage you to think about any of this: phone calls, text messages, emails, any pop-up windows that maybe show up on your phone or your computer or anything like that. Just kind of keep an eye out for any of those things that don't seem right. And if you can't verify that somebody is actually the person that they're claiming to be, you want to think about what you're doing. Maybe, beware of any of those links that you're clicking into, things like that. So if you're getting the links that, maybe they say identity theft alert, or that your credit score is dropped, and, maybe you're not a subscriber of any of those services that would be looking for those types of things, that might be that sign that something suspicious is going on. But, I always encourage folks use those tried and true methods to communicate with the company. I know my banks, my credit card provider, they all have apps that I regularly use for that kind of stuff. So whenever I get a text message or an email and I'm not sure, I go to that app and kind of look, see if they've sent me that message on that app, because I know that's the way they normally do. And of course, you probably have phone numbers on the back of your credit cards, debit cards, things like that, that you can use as well. So you always want to know who you're communicating with and not rely on those links that you get in text messages and emails. If you're interested in a monitoring service, just kind of keep in mind that a lot of times they're doing things that you can do for free. So they're looking at your credit reports basically, and they're looking at what's going on that. Again, that is something that you can do for free yourself. People always ask, is it worth it? Well, that may or may not be the case for you, depending on what's going on. But, just know that it is really something that you can do for free. They're basically doing the same types of things that you can do. Even if you do sign up for one, just kind of realize it's not taking you out of the picture altogether. You still do have a responsibility for things with identity theft and things like that. So again, ultimately, it is up to you what's on those reports and those records. So just kind of keep that in mind too, even if you do sign up for one. We'll get kind of wrapping up the last couple of things here. I know we're getting close to our end here. I encourage you to sign up for any of those account alerts that your banks and financial services may offer. You can get text messages, emails, about a long list of things. Go through their settings, figure out what they offer. I know mine will, send me alerts if there's an online purchase made. They'll send me an alert if it goes over a certain dollar about you. For your bank, you can probably set it so, if your bank account drops below a set amount, you'll get an alert about that too. So just kind of take a look at what they offer, figure out what works for you, and take advantage of that. I encourage you to set in any of those login protections. If that's two-factor authentication, that's always great. And the FBI tells us that's kind of that big step we can do to, double up our safety on online with a lot of our accounts. So set up those two-factor authentications. And any of those login alerts are great too. So if somebody's trying to sign in, maybe into your bank account or even an email, you get that alert on your device that will say, did you try to sign in, or whatever the case may be. Again, kind of look through those different accounts, see what they offer, find out what works for you. One of the last things I've got for you is this pre-screen offers. If you're getting all these things in the mail, credit cards, insurance offers, anything like that, they're basically running your credit reports and they're doing those pre-screen, pre-qualified things. They're basically getting a lot of information about you beforehand and then giving you that offer. You can go to optoutprescreen.com or call that phone number that's listed there. And you can basically let the credit bureaus know that you don't want that information shared with those companies, because basically all these companies pay these different credit reporting bureaus where they'll want that information about people that, they've determined are good, likely clients of theirs or customer base for them, and they'll give them that list. So that's how you're getting, your information out there. But if you go to that website there, that will help you kind of opt out of getting a lot of those details sent to you in the mail. I took advantage of that a few years ago, and it's greatly reduced the amount of mail that I get. And I definitely do not get as much junk mail as I used to. Also encourage you to download our credit reports book, and I had it there in the chat. I'll drop it back in there in 2 seconds. It'll take me a little bit to get my computer going to where I want it to go, but I'll drop that back in the chat box here momentarily. But our credit reports book is available on our website, consumer.sc.gov. And it's got a lot of good breakdown on everything that we've just talked about. This presentation basically follows a lot of the details in this book. And it's also got a little checklist too that you can go through, and it'll kind of help you out as you're looking at your credit reports, what you're looking at and what you should be looking at too. So that's kind of that back couple pages of that. And if you want any of our publications, we do have them for free. We will mail them out to you, physical copies. You can also download them on our website, consumer.sc.gov. We have our, of course, the credit report guide that I just showed you, but we also have our Ditch the Pitch, which is our scam prevention book. Our identity theft prevention guides also on our website. Somebody asked about a car loan, and it looks like it was run multiple times and impacted their score. The scoring agencies, they are, they tell us that they use those if it's all kind of in that same period of time for those big items like cars and homes. They're potentially supposed to be looking at that as one transaction. So that's kind of the issue for that. I'd be interested if that was run through the bank. So they were doing some of those hard credit inquiries with that. You might want to give them a call if you've got a contact number, if you know which ones of those that were issued for. Again, you kind of want to play out with that. If you're paying everything on time, again, that's going to kind of get that score back to where it may be. Hopefully they can tell you if they ran those hard inquiries on all of that. Go in there and take a look on those credit reports. It may even give you some of those places where you can look at that and see what's going on with all that. So hopefully they'll let you see what's happening and see if that was the case. I've heard a few folks say that too from time to time, but generally speaking, they are supposed to consider those as the same transaction if it's being run, especially at one place. If you're in there, you may also want to chat with the bank that you went through and see why they did it that way, what they might be able to do to help you out. So that would be a good policy. Somebody's asked if it's illegal for collection agencies to buy your account. That is perfectly legal. Basically, that's kind of how those companies make money, is those collection agencies. They, buy debt from other companies, and they're probably, buying it for a fraction of what you owe. We have some information on our website, consumer.sc.gov, about some of the collection laws and things like that. We've done a few presentations as well with that. You don't really, there are some things they have to do to verify that they actually did buy that debt and that they own that debt. So they should still be providing all that information to you about, where that account was from, how much you owed, those types of stuff. So there are rules about what they have to do to be able to collect that debt. So just kind of keep that in mind. You want to verify that that debt is actually yours before you start paying it. But with those debt collection companies, that is something that they can buy that. Somebody's asked about house deeds and people changing owners on the mortgage names and things like that. We've done a little bit of information on this with our, I think it was the Housing Month webinar that we did, but we did put some of the information on our YouTube channel with that, as well with home titles, home deeds, those kinds of things. Basically, your register of deeds in your county is kind of in charge of that. They're, state law kind of puts them in charge of all those records that deal with transferring property and things like that. A lot of the register of deeds offices have free monitoring services and things like that. So you want to just get in touch with that county office. There's a few counties where that's still done through the clerk of court's office. Check in with your county register of deeds or the county clerk of courts. They can kind of point you in the right direction, but they probably have some kind of monitoring service. They tell us that this type of fraud is extremely low because there are rules on having a certain number of witnesses and, different signatures and that kind of thing. You're supposed to have an attorney involved in changing over deeds and things like that with real estate transactions in the state. So they tell us that there are safeguards in place and it's extremely rare, but you may want to check in with your Register of Deeds office for your county and just kind of check to see what they offer. Somebody asked about us. I'm gonna try not to say the name of the credit company online. You can probably guess there's a credit score and report company that you can go through and then order credit cards through their app and things. Just kind of know if you're using those sites, they probably are using your information somehow, and they're going to, that's basically how they're able to provide those reports and scores and things for free, is they're trying to offer you some kind of service. So they're, offering those credit cards and those loans and those types of things, or getting you in touch with companies that offer them. So that's kind of how they make their money per se. So they're using your information to make that money. So just kind of keep that in mind if that's something you are considering. Again, probably can go through, you can definitely go through annualcreditreport.com to look at those credit reports, and then you're probably the bank or credit card company that you maybe already use, able to kind of give you a little bit more information as well too on some of those scores and things. But those free resources are out there with some of those websites, but again, they're using your information one way or another to offer that. All right, I think we've gotten most of those. I know we're kind of right at 11:30, but again, I'm going to advance my graphic here if my computer will cooperate. My email address is right there on the screen. You can also give me a call. That's my direct phone number. If you get our email announcements about our webinars, those go directly to my email. So you can reply to those, that publicinfo@scconsumer.gov as well, and that will come to my email. And I'm happy to point you in the right direction if I can get you an answer for some of this. And we will do our best to get you that answer. Again, we do have a consumer credit section on our website, consumer.sc.gov, as well as a debt section as well too. I know there was that debt collection question there too. So we have a great deal of information on our website for those topics as well. And then of course we have that book that we put in there that will have a lot of information for you. So I hope you were able to download those. And if you didn't, just let me know. Again, shoot me an email and I'll shoot those slides and things over to you. But thank you for joining us today, and I'm going to start wrapping this up, but we hope the information was useful for you, and we hope you'll join us again. Thank you very much.